Ready to clear up a big misconception in the financial world? Are traders and investors the same thing? Spoiler alert, they're not. From Warren Buffett's long-term growth strategies to the quick buck culture of trading, today we're demystifying these often confused terms. Let's get some perspective. Welcome to another episode of Christian Financial Perspectives. We're so glad that you've joined us. My name is Shawn Peters. I'm joined as always by my father-in-law and co-host, Bob Barber. Today, we have a really exciting episode for you today on why traders are not investors. And if we ruffle some feathers, sorry, not sorry, but we are going to be sharing scriptures and how those apply within this. So we hope you stick around. And if we help at least one person from making the mistake of getting caught up in the trading that is effectively gambling, then I think this video will have been absolutely worth producing.
Shawn, what made me want to make this program was I'm kind of tired of reading the financial articles every day where they intermix and mix up the words between an investor and a trader.
That's right. That's right. Yeah. So that's kind of where this came from. Is I'm sure you've seen in the news all the time. Oh, what are investors, looking at buying today, or what are investors looking at? Yeah, exactly. So we're going to be going over that and starting out with, first of all, what is an investor? So we have a couple different definitions from you, not just ones we came up with, but from arguably credible sources. So the first one, Bob, why don't you cover that one from Investopedia?
So Investopedia says an investor is any person or other entity who commits capital, I like that word commits, commits capital with the expectation of receiving financial returns. Investors rely on different financial instruments to earn a rate of return and accomplish important financial objectives like building retirement savings. Notice that building.
That's right.
Funding a college education, or merely accumulating additional wealth over time.
That's right.
That's I emphasize some words in there.
So the second definition we have for you is from Webster's Dictionary: to commit money in order to earn a financial return, to make use for future benefits or advantages. So what I'm noticing here, Bob, is a little bit of common thread.
I do too.
Investors are focused on the long term, 3 to 10 years or longer for their time horizon. And then just some additional insights for you, Bob, if you want to.
Well, I just see like they're committed. They're committed. It's to building wealth. It's not about what's happening today, Shawn. It's the future.
Exactly.
Okay.
We're not talking in days, weeks, or for the most part, even months. We're talking about in years, because otherwise you're not investing, which we'll get into that next. So an investor uses a diversified portfolio to mitigate risk. They're not looking for the hot stock pick of the day. That's not investing, that's trading. And investors often will look at companies' fundamentals, the management team, long-term growth potential, and maybe even like we do here, you're looking at, well, what is it they even do? Because even if a company has a lot of really good, quote, fundamentals, but the product and the service that they're offering is maybe kind of going out of style, or it's just not something that's very dependable, and maybe that's not a good idea for the investment.
And we throw in the mix biblically responsible investing.
Exactly.
What is the company? What might they be supporting?
That's right.
And we've talked so much about that on our other episodes that we've had.
That's right.
Yeah.
So the scripture for this section, we have Proverbs 13:11. Dishonest money dwindles away, but whoever gathers money little by little makes it grow.
Yeah, notice it's not all trying to get rich quick, is it? Yeah, it's little by little.
I love that verse. And it really focuses on this slow and steady wealth accumulation through long-term investments, not get rich quick, which again, I love how many times scripture talks about these kinds of principles.
Yes.
And you hear on social media, I'm not going to mention any specific names, but you will see all the time, oh, there's this new cryptocurrency, or this new investment, or there's this, if you do this one trick, you'll make all this money. Everyone feels like I'm behind and I need to catch up quickly, but that's not how you build and maintain wealth. And scripture talks about that a lot.
The turtle wins the race.
That's right. So next section we want to cover.
So we get the definition of what we feel an investor is, okay?
So now we're going to cover the definition of a trader.
That's right.
Which as we kind of alluded to already, is short term. Maybe it's minutes to days, or could maybe be a couple weeks, but
usually it's not.
Definitely
Usually
short term.
That's usually it's just a day, and that's why you see so many fluctuations between 1 hour and the next, or sometimes between 15 minutes in the next. You can see sometimes right before closing or right after, right at the opening, you'll see it shoot up real quick. Then you'll see it shoot back down. And then you'll see the same thing happening in the last few minutes of the day. It's just crazy.
Right.
It's crazy.
What is a trader? Well, according to Investopedia, a trader is an individual who engages in the buying and selling of assets in any financial market, either for themselves or on behalf of another person or institution.
And their time horizon, again, is aimed for just short-term profits based strictly on market trends, news, what's happening at the moment. Not the long term, but what's just happening at the moment.
Some interesting things to consider, but for traders, 95% of day traders lose money, which I think that's a pretty good highlight on the high-risk nature of trading. And they incur, or may incur, I guess we have to say, but they may incur higher transaction costs, including taxes, like the short-term taxes, as well as commissions that can eat into the profits.
I think it's the taxes that's the main thing.
Yeah.
I mean, the taxes is all based on income taxes.
That's right.
It's not based
Instead
on
of long-term capital gains.
Yep. And I was mentioning to you that we know somebody that got caught up in the day trading, and they were making, they were really doing good. It was in like 2021 when the market was doing nothing. You could throw a dart and it was going to go up.
Right.
But then what happened was they traded this stock over and over and over, and they made a lot of money, and then they got caught, I'd say, with their pants down.
For lack of a better way to say it.
And then it dropped and dropped, and they owed $200,000 or $300,000 in income taxes. And then
because of all the trades that have been going on,
the value of the stock was not there, and they couldn't get the value out to pay the taxes. So guess what they had to do? Go borrow against their home. Okay, so it's sad to see this happen.
Well, long story short, Bob, here is that it's not that we don't see traders make money. Okay, that's not the case here.
They occasionally make money, and you always hear about it when they're making money, but you never hear about it when they're losing.
The issue here is that traders, the very nature of what they're doing, it's not going to last. So it's not a matter of if they lose money, it's really a matter of when they lose money. I mean, you've been doing this for over 30 years, Bob. How many day traders have you met that have been doing what they do successfully for 20 years or longer? Have you
Shawn,
ever met
I've
someone?
never met somebody that's been doing it for 3 years or longer, but I have seen between 3 and 4 years. I've watched
maybe
sudden
5,
wealth.
depending on when they were doing it.
We've covered this with sudden wealth. I've watched sudden wealth just slowly dwindle down to nothing over that time as they're doing the day trader. And you got to look at the motivation. What's the motivation behind day trading? Is it just to make a quick buck? Well, yeah, it is. It really is. And I think this is where Scripture plays into this too. We look at Matthew 6:24, and it says, no one can serve two masters. Either you will hate the one and love the other, or you will be devoted to one and despise the other. You cannot serve both God and money.
That's right. Okay?
So this is really speaking into the quick profits and just trying to make a quick buck.
That's right. You cannot simultaneously aim for quick profits and long-term growth. So choose wisely.
Yeah, definitely.
All right. So what are the main differences between a trader and investor?
And I think it's important. This is important right now to see when we say about this. I want to say something in the middle here. The main difference between a trader and investor, when you're reading anything on the internet, this is where you really got to pay attention right now, because there's a big difference between a trader and investor. We've gone over what an investor is and a trader, but what are the main differences?
That's right. So the first and foremost is the duration for which the person holds the asset, or the time period.
Right.
So is it being held for a day, a few days? Is it something that's being held for months or years? That would give you a big indication, the longer term, on whether or not it's a trader or an investor.
Investors have that longer term time horizon.
That's right.
It's going to be, investor's going to have a 3, 10, 15, 20 year time horizon.
That's right. And traders tend to hold assets for much shorter periods of time to try to capitalize on short-term trends.
They're looking for those trends.
That's right.
And they're all guessing against each other. Okay. And they're also gambling many times on just one company or two companies.
Right.
So they're putting more of their eggs in one basket, where an investor is going to diversify a portfolio.
Which goes right into our scripture for this one, Bob, which is Ecclesiastes 11:2. Invest in 7 ventures, yes, and 8. You do not know what disaster may come upon the land. Diversification is crucial in investments to mitigate risk.
That was the wealthiest guy in the entire globe.
That's right.
I don't know what we heard, some kind of interpretation that Solomon would be worth 7 or 8 trillion today or something. Some crazy
numbers. So.
Yeah. So
all right, the misuse of the terms trader and investor. So here's the problem.
Yeah.
As you alluded to in the beginning
this
of the episode.
This is why I made the program today.
Many financial websites use these two terms, trader and investor, interchangeably. Apparently, I think due to inexperience and lack of knowledge. I guess no journalistic integrity.
I cannot understand why they mix them so much together like that.
Yeah.
And so many times I'm saying, you mean to say trader here, not investor.
Yep.
Yeah.
And the implications of this, the misuse confuses the public, and it leads to misconceptions about investment and trading strategies.
So when you hear the word investors are doing this and investors are doing that, and you're thinking, well, I'm an investor, I'm not doing that.
Yeah, or then we get the question too, Bob. So clients will ask us, well, I heard on CNBC or whoever, like whatever. I mean, it's a pretty major.
Yeah, it is.
But you'll hear on these financial sites, whether it's articles or videos about what investors are doing. And then clients are asking us, and we go, no, that's a very short term. That's a day trader thing.
They should be saying trader, not investors. That's right.
So investors, and I think this is an easy way to hopefully remember this, investors focus on time in the markets, not timing the markets. And time in the markets is a proven strategy.
It is. Yep. A trader is just concerned about quick profits without regards of the company's long-term potential or their impact on society.
That's right.
Yeah.
That's right. And so the scripture for this is Luke 14:28. Suppose one of you wants to build a tower. Won't you first sit down and estimate the cost to see if you have enough money to complete it? Planning and assessing risk are essential before embarking on any financial journey.
Absolutely.
Especially when it comes to your investments.
Yep. Well, we're gonna hark on a little bit more here, aren't we?
I feel like I had to hold you back on this, Bob, because this is the part you wanted to get to.
Yeah.
Traders are professional gamblers.
They are. I mean, similar to the gambling, the majority of day traders lose money or do so eventually, if not right away.
Yeah. Like we said earlier, you've seen some that have 3 to 4 years, maybe in the right circumstances, maybe 5 years, but you don't hear about or meet people that have been day trading consistently and profitably for 10 years. And it just doesn't happen.
And I've had clients in the past, they've gone through all the courses, they've bought all the advertisements that they've heard and spend a lot of money on the trading programs.
And we won't get too far into that, Bob,
Okay.
But like we talked about one of our other episodes on the professional doomsayers, and you have these people that are selling you this trading program that's going to help you be profitable. Here's my first question.
Yeah.
Why are they wasting their time on this educational training program that supposedly works? Because if it actually worked half as good as they say it does, they wouldn't be wasting their time selling it.
They're making
themselves money on tricking you into buying their nonsense.
Right.
Not on what they're actually selling you.
Because if they sell it too much and everybody starts using that program, it'll no longer work because now the strategy is not unique.
Yeah. So just like gamblers, the traders, they're not particularly concerned with the underlying value of the assets. They're more focused on those short-term movements. And we have another scripture, Hebrews 13:5. If you want to read that one.
Keep your lives free from the love of money and be content with what you have. Money's not evil, but the love of it, and this is what day trading can do. And I like your interpretation. I'll let you share that.
Money should not be the end goal. It's just a means to achieve financial security and contribute back to society, expanding God's kingdom. If you're a Christian, that's our goal. So we have a case study, if you will,
Oh,
or example.
a case study,
Yeah.
right.
I guess it's not long enough to be a case study.
No,
but
it's not.
Warren Buffett.
Oh,
So-
he is definitely. Well, he's 90. He turned 93 a
goodness.
few weeks ago. So the old guy just keeps on going.
That's right. Well, so investors look at what the company makes and its long-term growth potential or dividends.
Yeah.
Warren Buffett is arguably the most famous modern investor, and his long-term strategy focuses on finding excellent companies to invest in and holding them for the long run. Warren Buffett doesn't day trade.
He hates
as
it,
far
but
as I
no.
know, never has.
I mean, when you listen to him, and I listen to him a lot, they hate the thought of it.
And it doesn't work.
And they talk about how it just is so bad for the markets itself as well.
You know, again, to use the gambling idea, Bob, the reason why we say day traders or traders, not investors, are gamblers is because just like with gambling, the house always wins. So you might get a lucky streak at blackjack or whatever is your game of choice, but eventually the house wins and you lost it all. And if you're really lucky, maybe you made enough money to pay for your drinks.
Well, I think I want to learn from the most successful investor I know
agree,
of modern times, which is, like you say, Warren Buffett. He is very intelligent, and also he doesn't let emotions get involved. You always hear him injecting money in the markets when they're way down.
Yeah.
So he takes the emotional part
right.
out of it, and he's looking for things on sale. So the guy is smart, and I guess something's going on there too. At 93 years old, he's still doing it. I think that's amazing.
So we hope this clarification of the difference between an investor and a trader has helped you for the next time you see an article about, quote, what traders are looking to invest in today. Because as I think we've made clear, what the writers usually mean is what traders are looking to buy today, not invest today.
That's correct.
We're using those interchangeably again.
Yeah.
And ultimately, financial writers need to exercise caution and correctly differentiate between traders and investors to provide accurate advice. So if we happen to have someone watching or listening that works for one of those financial sites, hopefully this helped.
I hope so. And please, if you are a writer, don't call an investor a trader.
Yeah.
Okay. And we're here to help you invest for the long term, and we're here to help you with the biblically responsible investment as well. So.
That's right. Thank you, and God bless. Thank you so much for watching. If you enjoyed that video, be sure to like and comment and subscribe to our channel so you can get future updates. You can also follow us on social media, handle shown on screen. In the meantime, check out one of these other videos.